Hi and welcome back to Cheeky Crypto. My name's Chris and it's fantastic to have you back with us for another podcast video. And in today's video, we're going to have a look at Bitcoin. We're going to dig into some of the actual data, around hash rate and so forth, right? And we're also going to look at how the miners are actually performing. We're going to dig into FTX and much more. If you enjoy this sort of content, mash up the like button, subscribe if you haven't subscribed already, tapping that bell, selecting all the notifications so you never miss a video. Don't forget to jump in the Discord. It's absolutely free to join. It's a no-brainer. There's over 6,300 people supporting one another. Navigate this space safely. Fantastic community. Definitely worth immersing yourself in the community. Don't forget to check out the 𝗕𝗘𝗪𝗠𝗠𝗘𝗥𝗦 Elliott Wave theory course, portfolio course, and risk management courses, all available there. Fantastic, educational platform. So go check it out. Right, let's get down to the desktop. Okay, so we're going to start here, and FTX, and it's come to light. FTX owes money to not just some crypto firms, but also to Netflix, as well as Binance, Wall Street Journal, and this is all according to the filings, right? And really interesting stuff. Lawyers for bankruptcy or bankrupt crypto exchange, I should say, published an extensive list of creditors that include media companies, airlines, universities, and even charities. I mean, that is just terrible. Could you imagine, being a charity owed money by FTX and Sam Bankman-Fried? I mean, it's disgusting, really. It really is. Let me know your thoughts and opinions in the comments below. Absolutely disgusting stuff. And look, what we got here. It's a list of everyone. It's the list that everyone's been waiting for. Minus 9.7 million redacted customer names, but 116-page FTX creditor list, which names companies such as Netflix, Apple. The list goes on, right? It's rather comprehensive. Look, there's a few influencers that have recently been articulating to people that the FTX saga is not actually impacted the markets that badly. And I guess to a point, up till now, it had like its initial sort of hit and impact. But I don't think that it's really played out as kind of expected. And, the bankruptcy stuff is still yet to unfold, and those assets that are held are still, being held. Like they're going to end up on the market at some point, and that's when I think the real trouble hits. And that's why I've been saying things like, I don't think that people should have flipped bullish so quickly. I think we need some level of confirmation, and I haven't seen that yet. I think as soon as we get it, that I'm going to be happy to be bullish. Like I want to be bullish. Like I'm not a bear. I'm just a realist. And I think the macro environment is not in a good place right now. So this is why we have the foresight and the mind to be saying this stuff and go up against, I guess, the narrative. And that's a detriment to views and all sorts of different things. But this for us is about having people build generational level wealth and being successful in the space. But there's nobody out there more than myself that would like to be bullish. So yeah, look, let's see how things unfold over the coming weeks and months. But let's move on from this douchebag. We've got crypto Wild West. 85% of crypto firms fail to meet the minimum regulation standards or regulatory standards. This for me is a monstrous claim, and this is from the Financial Conduct Authority, the FCA, and according to the watchdog, basically, as they've articulated here. And significant failures have been identified by the regulatory body. Key controls such as customer due diligence, risk assessments, and transactions and ongoing monitoring are some of the reasons cited. And look, I think the regulators in the UK have done a much better job than the SEC in the US. I think the US regulator is unfit to basically do what they're being, I guess, installed to to fulfill and to keep investors safe, make it a level playing field, and like the one other I guess bullet point that they've got in their own mission statement. I just don't think that they've delivered on what they should be delivering against, and I think there should be punishment for that. Now, I think the FCA have done a better job, but everybody can always do better, and I think having clarity is something that needs to happen in this space. Is something that I expect to see, and I say it time and time again. Like, the people shouldn't accept what is being put in front of us. Like, we shouldn't be accepting that the SEC can just fine BlockFi and pretty much put that final nail in the coffin, and then to get their fine because the company's gone bankrupt, leapfrog the investors they're there to protect, and get that fine money back as part of the bankruptcy. Same with Genesis and Gemini. We saw fines for those guys, and Genesis have gone into bankruptcy. Is it going to be a similar scenario where the SEC leapfrogs investors in the bankruptcy for Genesis? I mean, where do we draw the line? Is that acceptable? Let me know your thoughts and opinions in the comments below. I think personally, there should be some sort of level of punishment that is severe enough that when people take up these jobs in these regulatory firms, that they want to actually do the job and do it well, and not just for self-gain and I guess media coverage. I really don't know what it is. I'm just surmising here. So let me know your thoughts and opinions in the comments below. But yeah, sick to death of this side of things. And look, 85% of firms are not meeting the standards. Is that because they don't understand what the standards are, or is this that actually there's a lot of absolute nonsense in the space and they need to do better? Could be a mixture of both. But that's why I asked what your thoughts and opinions are. Now, the main part of this video is to talk about Bitcoin. Bitcoin hash rate taps new milestone with miners hodling at 1 year low. Data shows that Bitcoin miners' BTC reserves are at their lowest since December 2021, despite a dramatic hash rate resilience. Now, basically what we're seeing here is we're seeing the Bitcoin, obviously, seeing a new record in network activity as volatility sends BTC price action to fresh 5-month high. Now, look, I think there's a bit of manipulation going on. I'm pretty sure that you will find it if you go digging hard enough. But data from resources, including mining pool stats, confirm that Bitcoin's hash rate hit new all-time high on Jan 26th. The hash rate passes 300 EHS threshold. In another example of the recovery post FTX woes, network hash power is now bigger and I guess stronger than ever. And again, this is I guess processing power dedicated to the network for miners. Again, great for security and all that wonderful stuff. But the moral of the story is that the miners, they're not hodling, and is that something that we should be concerned about? Are those the individuals that are selling in mass? Who knows? It has come to light that Tesla did not buy or sell any Bitcoin in the fourth quarter. The company reported $34 million in impairment charges to its Bitcoin holders. So look, rather interesting stuff. I will link this in the Discord for you to read through at your leisure. Ultimately, where am I sat? I think that we're going to have a retracement. I expect it to happen. This will either confirm that we're going to be turning bullish, or it's going to confirm that actually we should expect some further low times in the space. Let me know your thoughts and opinions. Are you now bullish or are you still bearish? Really interested to get your views and opinions. Do let me know in the comments below. If you enjoyed today's podcast, mash up that like button, subscribe if you haven't subscribed already, tapping that bell, selecting all the notifications so you never miss a video, and I will catch you in the next one. Take care.